In this video, learn how our equities trading desk uses unusual trading volume to find profitable gap and go and pullback trades. Hi, I'm Mike Bellafiore, co-founder of SME Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic One Good Trade and the Playbook. In this video lesson, two proprietary traders from our firm share how they use a powerful trading signal to find profitable trades right on the open.
So this was a trade I made in Netflix the other day. We call this a Dr. S trade, and it's a gap and go and pullback trade, recognizing unusual buying volume. So what is the Dr. S pattern? This is a pattern that aims to identify that a stock that has significant movement and highly elevated R vol within the first few minutes on the open. We're trying to identify what institutional sentiment is for the day, and due to the nature of how institutions must execute trades, this strategy tries to capture the continuation of the initial direction.
All right, so we're looking for stocks that are in play, stocks that have a catalyst in them, either a technical catalyst or a news catalyst, stuff that we talk about here before the open. And then what we're thinking about is, if this is going to be a trade that's going to be a really opportunistic trade for the day, if this is going to be a trade that's going to trend for the whole day, if this is going to be a trade that's going to move a lot during the intraday or for 2 days or 3 days, if this is going to be something where we see, in this case, extended buying, unusual buying over a period of time, what should happen? And what should happen is, our thesis is, hey, this is a catalyst day for this particular trade, either technical or news-based, or sometimes both. And it's going to be something that could really move directionally, cleanly, and we can make a lot of money. What should happen right on the open? What should happen right on the open is that lots of volume should come in. Lots of buying should come in. There should be a thrust higher with elevated volume. The institutions who really want to soak up the stock should leave footprints. The big money traders should show themselves. They express showing themselves with elevated volume, a thrust higher that we can see. And if we see that, we want to participate in that trade alongside of them. And again, this could be an intraday trade, this can be a 2-day trade, this can be a 3-day trade. You can make them into different types of trades. But that is what we're playing around with. That's what we mean when we're talking about the Dr. S pattern, who was nice enough to breed this idea for us that we're working on. And in this example, we're going to do it from the long side. What do we got next?
So the trade idea is that a stock gaps up, ideally at least 3% on a positive news catalyst. And if institutions want to buy this stock on this news, we should see that right on the open with significantly elevated volume and a strong directional opening drive. And once buyers establish control, the idea is to get a core for a trade to hold for a longer intraday or potentially multi-day move. And as a general risk rule, risk 10% of your intraday stop per tier.
So one of the things I'd love for you to add to your playbooks is something we call trade strategy. And I'd like for all you guys to do this as well. And in the title of this, I reworked this for you, but in the title of this, there's 2 trades. I'm trained as an attorney, I'm trained as a lawyer, I went to law school. I don't practice, I never practiced. I like to think of things logically, and I think you can learn from that. When you put this together, you called it a gap and go trade. Correct. Okay? And then when I actually read the description of the trade and what you did, there was a gap and go trade, and then there was a pullback trade. And so what you want to get into the habit of doing is seeing trades very clearly as to what the trade is. A gap and go trade, playing the momentum right on the open, is a separate trade that has separate variables, that has a separate trade system, that has a separate trade strategy. That should be unique to you. And then a pullback trade is, again, a separate trade that has a unique trade strategy, that has variables specific in it that you are going to adhere to. And you just want to make sure when you're trading that you see, I'm making an opening drive trade and I'm going to trade it like this. I'm making a pullback trade and I'm going to trade it with this type of strategy and with this type of system. And so that's super important. You don't want to sort of mix things up. In the middle of a trade, you can actually have two different trades inside of a bigger idea. But you can have a big idea that, in this case, Netflix is going to trade up for the next 2-3 days, or it's going to trade up all day today. And you can have a momentum trade in it, and then you can have a pullback trade in it based on the same idea. But your stop for your momentum trade, for your opening drive trade, is going to be distinct. Your stop for your pullback trade is going to be distinct. Your target for your pullback trade is going to be distinct. Your target for your opening drive trade is going to be distinct. Your strategy is going to be distinct for one. Your strategy is going to be distinct for the other. Okay? And so, a long time ago, I wrote a book. I know you guys sort of see me walking around here every day, and I just sort of make this as an observation and hope it comes off that way. But I wrote a book, One Good Trade, that if you essentially are hired at any prop firm globally, a majority of the prop firms globally, what is the book that traders are told to read? One Good Trade. So all around the world, if you're hired at a prop firm, that is the book that you're told to read. And I do hope that came off the right way. I do not mean that. I mean that observationally. And so that's essentially what I'm saying to you, which is make one good opening drive trade, make one good pullback trade. And the second book I wrote is The Playbook. And Johnny, I'm going to give you a copy of this.
Thank you.
For spending some time with us.
Awesome.
So we'll sign this and give this to you. But the second book that I wrote builds on One Good Trade, and it's the idea of building your overall business, trading business, with a series of one good trades, a series of playbook trades. And then measuring them and building from them and seeing which ones that you like the best. And so you guys are going through the winning trader here. That's a series of trades that you are trying to figure out if they work for you. You're measuring them, you're experimenting with them, and you're going to then go build your own playbook. Like I said, you turn around. You're going to build your own playbook. And it's going to be unique for all of you. You're going to take some trades. You're going to like some trades, you're going to like some trades, you're going to like some trades, you're not going to like some trades, you're going to like some trades. It's just going to be different. But we've got to be thinking very concretely about each individual trade.
So the big picture on this day, SPY was pretty range bound. The only macro event that was really happening was that Boris Johnson stated the possibility of making it illegal to further delay Brexit, potentially resulting in a hard Brexit. There was nothing new related to the China situation, so as you can see, the market was very range bound.
If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in the new window, so don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So intraday fundamentals for Netflix on this day, the total number of global subscribers increased by 63.9 million from March of 2017 to September of 2019, with Europe, Middle East, and Africa regions recording the largest increases, followed by Latin America.
Okay, so I highlighted that. Essentially, what that means is the core of their business is getting stronger. They sell subscriptions, they're selling more. One of the key metrics for this company is global sales. They started here. Would this be able to translate into other markets? It is. The core of their business is doing well. A key metric is showing that.
And so some of the levels that I was watching was this 306.50 level, and as resistance was this 320 level. The ATR for Netflix was 7.65. The average volume was 8.17 million. Our vol on this day was elevated at 5. The short float was around 5%, which didn't play much of a role. The float was over 400 million. The institutional ownership was about 83%, and on this day, Netflix was only gapping about 1%. So this is looking at the daily for Netflix. As you can see, they've kind of been accumulating a little bit higher following their earnings report. This is just looking at a 5-day showing the run-up that we've had prior to today. Just looking at intraday 5-minute, I use this a lot for finding the trend for a stock, especially if it's a stock that I'm trying to hold for the day. This is the 1 minute.
All right, Jake, so let's bring you in here. On your review of this trade, you lined up some key stats. Can you walk us through why these are significant and what they mean?
On this trade and a lot of other setups, when something plays out, I like to look back and see when did it change, when did the pattern show itself, and what characteristics were there that could provide insight to being able to trade this another time going forward. So what I did was take a look at right on the beginning, the opening drive produces a few green bars, and then right as it slows down, I wanted to see when it's slowing down, what happened beforehand, what happened as it slows down, and what's happening afterwards. So we see that the R-vol on the table below, that it was slowly decreasing, and then the average daily volume was getting higher and higher, but at a slower rate, and that the change in the percentage of the ATR was increasing up until this point, and then once it pulls back, right before it pulls back, we can see that the acceleration, so the difference between each minute and how much further up it got, started to slow down. And being able to look at this chart and a few others, was able to see that right when that change finally occurs, that there is a recognizable pattern that the in the volume, in the relative volume, and the acceleration of the chart, and to be able to identify that turning point.
So when you're looking at those stats, what is that saying to you? Is that giving you more confidence on one particular side, and if so, why?
I would say in particular with just only one example, I can see what happened exactly here, but being able to match this with the FedEx trade that we went over yesterday, as well as other examples of the Dr. S trade, you can see that the pattern tends to come up again when that pullback is occurring. We can see that in the beginning that the direction that it moves tests the R-vol over each example and see that it's always above 4. When it's in that opening drive, we can see that the percentage of average daily volume, when it starts to slow and eventually does have that short-term pullback, it's been over 10% in each of the examples. And for the change of the ATR, there's been over half of an ATR move in those first 7-8 minutes in each of the examples. So it's just confirming that this pattern is occurring.
Oh, good. So you're using statistics in real time to give you more confidence that this is indeed unusual volume in this particular name.
Exactly. And to be able to do so, it's looking at this chart, looking at what happened, looking at the FedEx chart, looking at what happened, and then just comparing and finding patterns.
Yeah. And look, we talk a lot about using technology to build alerts, using technology to build filters, scripts, using technology to build automated models. You guys can also use technology to give yourselves more confidence that something is going to follow through. You can collect data and build real-time tools that will say to you, hey, from here, this does have more of a chance to go up. From here, this has more of a chance to finish high of day. From here, this does have a chance to go another 2 ATR. This does have a chance to go up another 5%. You can spit out that information to yourself in real time that's separate and different than just filters, scripts, and automated models. And if you can give yourselves that type of data in real time, you can start to build a nice tool to give yourself an advantage. And I know you like to trade a lot of the low floats and the biotech names. That data, particularly in those sectors, can be particularly helpful because it'll give you a sense of like how much something can go up, give you a sense as to what you might expect, what your risk profile is in a particular trade.
So since this is a trade to hold, we want to identify reasons to sell. So the idea of gap and go is that if institutions step in on the open in the same direction of the gap on elevated volume and do so for a sustained period of time, i.e. by an opening drive, then the stock should trend. Therefore, my reasons to sell should be when the stock stops trending. So some examples would be if it makes a meaningful lower high on a higher time frame, that could be a reason to sell some of your position. If it breaks and holds below VWAP, that might also be another place to sell. If it gets extended more than 3/4 of an ATR from VWAP, that could be an indication that it might be overextended. It might need to make a more sustained pullback. And then if it makes a meaningful lower low on a higher time frame, that would be a reason to fully exit your position. So in terms of trade management, we see significant institutional buying right on the open. We're holding above this 306.50 support area and also above VWAP. This is a place to enter tier 1, risking low a day for an opening drive push higher.
So that's where I'd really like for you to be more specific at the beginning. What's going to get you to make this opening drive play? What are the specific variables for that so that you can be clearer and when you want to pull the trigger?
And then we can see that it pulls back on relatively light volume. We're still holding above VWAP, so that is a good indication that this Dr. S trade is indeed working and that the stock is likely to trend higher and potentially close at the high day. This is a place where you can really add size on because it is so early in the day and the prices, you're able to get much better prices. So you can enter tier 2 and tier 3, risking below VWAP, looking for a trend higher for the day.
Good, and again, for that pullback trade, what's the type of volume you want to see right on the open that gets you interested?
Increased volume, so it does.
So if you can be more specific about that, that would be great. And then what's light volume mean to you? How are you defining that? And then are you always buying it only if it holds above VWAP? Are you, and what's your stop there? Are you considering if it leaks through VWAP, maybe buying it again if it goes and holds above VWAP with the stop below the wick below VWAP? So the point is, the more you can give yourself a framework for how you're going to trade that, the easier it's going to be for you in real time. You'll be thinking about less stuff and you can just pull the trigger better.
So as you can see, like later in the day, we do make a meaningful lower high right in here. This is signaling to us that the uptrend may be weakening, but the long thesis is still valid. So given that, this would be a reason to take off 1/4 of your position. And then we end up pulling back into VWAP. This would be a place to potentially add back on that size, the size that you took off once it was failing to break down from VWAP. That was showing us that the uptrend is still there. Buyers are still supporting the price. And so we're still interested in this stock potentially pushing back towards the high day. This down move was also on more of like a slow grind lower, which is showing us that sellers aren't enthusiastically trying to push the price lower. And so given this, this still validates the long thesis and should be a reason that you continue to hold the stock. And since this never makes a meaningful lower high or lower low throughout the rest of the day, and it stays within 3/4 of an ATR from VWAP, there's no reason to sell this until the close of the day.
Yeah, I would encourage you to think about a system where something spends a little bit of time below VWAP. If you really love an idea and it's acting well technically, and you're going to use VWAP as an exit, I like the idea of adding a time period to that and a close with that time period. Just a simple idea. You might say, I need to see a 5-minute candle close below VWAP. Very simple idea.
And I find myself getting wicked out occasionally when it does make a lower low or lower high. So for me, when I say meaningful, I do want to see it really show that it's holding below there, show that sellers are holding the stock lower. And I found that having that specificity has allowed me to actually hold positions that I previously wasn't able to do.
Or you can hit out based on price and then have a system to re-enter with a stop below the wick.
So the trade variables for this, Netflix is a momentum name that was gapping up about 1%. Ideally, we'd like to see it gap up more than that. It was showing us that there was some strength in the pre-market by gapping up. It was accumulating higher on the daily time frame, as we saw. Our vol was also elevated, and it held support right on the open. We also saw sustained institutional buying right on the open with significantly elevated volume, showing us that Dr. S pattern. And we saw a low volume pullback after the opening drive, which was a place for us to add. We held above VWAP for the entire day. We leaked below, but we never meaningfully held below. And we stayed within half an ATR of VWAP, which shows to me that it never really got so overextended that the uptrend was in the question.
Yeah, this is great. And this is what I was talking about before. This is what you turn into a trade strategy. If 1, 2, 3, X, Y, Z, A, B, C, then I'm going to give it 1, 2, 3 worth of risk and give it a go. Good. All right, so I added this, and I just want to make a point. I'm not trying to give away your code here, Jake. In fact, I actually cut off some of the code. But so it's not really the code, and the only people who would really understand it are internally anyway. But what I really liked about what you did here, well, I'll let you explain what you did here. So we identified the Dr. S trade as something to sample, and then we say, if we like trades, let's build technology to help us find them, spot them more. What are you doing here?
One of the resources that we have available to us here is CloudQuant, and CloudQuant makes it really easy to be able to look at a pattern, and once you've identified that pattern, break it down into variables such as what Alex had showed. Say this is what I'm looking for, by this time it has to occur. And what the script does is that it takes that amount of time and it says within the first 7 minutes, we want to see X, Y, Z. And if that occurs, then alert to me and let me know that this pattern is occurring and return the symbol so I can trade off of that pattern.
All right, good. And if you guys spot trades you really like, so you're going through this sampling period where you're going through the winning trader and you are archiving those setups with playbook trades, and you're figuring out which of the trades you really want to take and build into your own playbook. For the trades you really, really like, you should be thinking about building filters for those setups. The next step is you should be using scripts to automatically enter. The last stage is you should be thinking about automated rules in, automated rules out. But if you really find a setup that you really like, maybe Kyle, you like a second day trade, and you see one, you hit it, you really like it, you need to use the technology here. You need to be building filters for that, and if you don't know how to build them, ask, and that's a good way for you to learn as well. But it just takes one. We want to be in the trades that we really like. When we're in the trades that we really like, it's not stressful. When we're in the trades we don't like, we're bad traders, all of us, even the best traders out here are not good traders in the trades they don't like. The work we do with elite traders universally is, how do I stop doing the stuff I'm not that good at? And how do I get bigger in the stuff I am good at? How do I risk more in that? And so, you know, how do you feel when you're in your favorite setups?
Relaxed.
Yeah.
Calm.
100%. Relaxed, calm. That's how I feel too. I'm like, and it's almost like when you're in the right trade, I don't want to say you don't care if you take a loss, but you're at ease. You're comfortable. You're at peace if you're going to take a loss. I am in a trade, we talked about this right now, that I'm about ready to take a loss. Okay? Only sheer good fortune is going to keep me from taking this loss in this Peloton long that I've had, the swing trade I've had on for a while. It's a good trade. I'm going to lose a decent amount of money, but it was worth the risk, and I would make that trade again, and it's a good trade. It looks like I'm not going to be right on this trade, but I want to be in trades like that. And if I take enough trades like that, I'm not going to be stressed out. I'm going to do fine, and that's my job, right? One good trade, one good trade, one good trade, as somebody once wrote, and trade your playbook. Now it's your turn. Are you going to use unusual volume as a signal to make opening drive trades, or are you going to use it to consider taking a pullback trade? Let us know by leaving a comment below right now.